Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, the 2nd December, and this is your London Open Prep. European stocks look set to start flat to slightly lower as momentum proves hard to find, while the dollar is steady and the euro is a touch firmer ahead of key inflation data. Euro's tone is cautious. Futures point to a subdued open as investors weigh softer shop price rises in the UK after retailers pulled Black Friday discounts forward. A sign of intense competition heading into the holidays. In Westminster, debate around the budget continues. One prominent column argues the plan was shaped with bond markets in mind, and notes the blowback has grown, even mentioning the budget watchdog chief's resignation. The takeaway for markets is simple. Fiscal credibility is back under the microscope. Meanwhile, in policy and corporate headlines, Elon Musk criticized tariffs as market distorting and voiced support for high-skilled worker visas. In Asia, South Korean auto shares outperformed after Washington confirmed tariffs on their exports were lowered to 15%. But the wider risk mood was dented by a sharp overnight slide in crypto, with Bitcoin down about 6% and briefly below 86,000. On the continent's policy front, President Macron is pushing to rebalance trade as Chinese exports flood Europe, reflecting a tougher line on competitiveness. Brussels also agreed to bring Canada into a European defense purchasing program that offers favorable loans for joint weapons buys. And there's a sober note on industrial policy. Reporting suggests Europe's big hydrogen push has burned through significant funds with far fewer electrolyzers installed than targeted. Turning to markets, currency traders are focused on Eurozone inflation, the harmonized index of consumer prices. The euro is grinding higher against the dollar, above the 1.16 area, helped by softer U.S. manufacturing signals and growing bets the Federal Reserve could cut rates later this month. The broad dollar index is treading water near recent lows. Dollar-yen remains on the back foot as a positive risk tone offsets expectations for gradual tightening in Tokyo, while sterling is hovering near 1.32 but capped by its 50-day trend line. The Australian dollar is holding near a 3-week high. The Swiss franc is firmer, with dollar franc slipping below recent levels on U.S. rate cut pricing, and the Indian rupee continues to underperform as foreign outflows lift dollar rupee toward round number resistance. Commodities are mixed. Gold is close to a 6-week high, having bounced after an early dip, with rate cut expectations offering support even as local prices in India eased. Crypto is the outlier, with the Bitcoin drop undermining risk appetite at the margin. Looking ahead, it's all about data. Eurozone inflation lands this morning, and the U.S. private payrolls report is due later, both key for rate expectations into year-end. Otherwise, the calendar is light, so price action may be driven by those prints and the European cash open. I'll be watching the euro against the U.S. dollar, looking for an uptrend to extend if Eurozone inflation surprises on the high side, or to fade if it undershoots. I'm also watching sterling against the dollar for signs the 50-day cap holds, dollar-yen for further slippage if risk softens, and dollar-franc for a continued downtrend on cut bets. Gold should stay supported on dips as long as rate cut pricing holds, and I'll keep an eye on Bitcoin for spillovers into equities. In short, markets are data-sensitive and cautious, with Europe searching for direction while the dollar drifts and rate hopes do the heavy lifting. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.